Well, the stock market was already down before the FOMC announcement, but when that came out, it went even down further, and then all of a sudden we had this big rally attempt up, and then a little bit of a fail into close. My name is Michael Sylvia. You're watching the Daily Stock Market Brief. This is the show that we do Monday through Friday, 5 days a week. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. Today's show, we're going to be going over some signal charts, some various things that I see, and then going into the indices, wrapping it all together with a conclusion. Very interesting press conference. It was weird because, you know, the dot plots, all of a sudden Powell really tried to do everything to make it seem like, oh, those are meaningless. Not to worry. Do whatever we can to save the stock market. It's a weird day overall. Let's hop into today's show. All right, everybody, welcome back. Starting off with a seasonality chart. We talked about this yesterday. Not going to spend much time on it. If you already watched that, good stuff. But notice here how we had that high there in June and then the potential for a sell-off. This is not the sell-off we've seen so far, but it's the sell-off that we would like to see in order to see and feel more confident about a July rally. This is one chart that we have been talking about. This is the US dollar, and we've been talking about the falling wedge and the potential for an inverse head and shoulders. What do you know? Almost up 1% on the day. Pretty significant move. Now, the S&P 500 didn't really get hit too hard, but we'll get into those zoomed in charts here because there are some structural damages that took place, but nothing to a freak out kind of extent. Now, if this continues to press higher, I do think that we're going to see continued down movements in the price of gold and the price of silver. Gold did get hit pretty hard today. Now, we typically, you know, after a big move like this, it might take some time and then potentially head higher, but we'll go into that as time progresses. Just notice the inverse correlation between the dollar here and the S&P 500. As the dollar, right around this point started really dropping hard, forceful move, the S&P 500 really started rallying hard here. Now, when we talked about the month of May, one of my first videos into May, the dollar typically has a stronger month in May. We did not get that. However, we did end up breaking out of this falling wedge. And you can see here that the S&P 500 really is just kind of just drifting higher. Now we're starting to see some strength, and now we're starting to see a little bit of weakness there in the S&P 500. Is it going to continue? It might. It would be nice too because it would follow the seasonality track and really set us up for something in July. However, like I said, today it wasn't that bad of a day, to be quite honest. So nothing structurally done as far as damaging goes. Now here is the ratio we've been talking about. The SPY, and then we're looking at the ratio of the S&P 500 over the TLT. This has been a negative divergence, and now it's starting to play out. We're starting to see some weakness. Also, the divergence that we've been calling out is on the NYMO. You can see here the lower highs and then the higher highs in the S&P 500. Now we are a negative breadth, but by no means are we overextended, which means that we still have the potential to fall further here. Also on the 9-month, this is just the traditional for the NYSE-McClellan oscillator. This one did take a pretty significant drop. We were talking also about this negative divergence. And when we pair it with the NYSE right here, you can see the NYSE is holding on to this trend line. So if that starts to crack, that could be a little bit of a red flag. Perhaps we crack it and then potentially try to head up higher, drift higher, and then potentially goes down further. I'm going to be watching for overextended levels on this one as well for potential long entries. The CPC sell signal, you can see that the 10-period moving average is starting to crank itself back up. Now, you know, it's still a little bit of a distance away, but if we cross through that 0.8, that is that sell signal. So you just proceed with caution there. You can see in the background the shaded purple line. That is the CPC on the daily. We just like to smooth out the data with the 10-period moving average. So we'll continue to see how that develops as well. Meanwhile, the lumber to gold ratio is at 2.15%. If it finishes this week below zero, that is a risk off move, but we still have 2 days left, so we'll continue to monitor it. Also, the divergence that's been in this that we've been talking about now is playing out too. You can just see S&P 500 was drifting higher, but the internals are weak. That is not a good sign. And not to mention when we pair the other charts with volume, as we get these false breakouts, okay, you want to see some continuation and you want to see it hold those levels, and we're getting low volume on those breakouts. There were so many red flags, and we're kind of seeing that today. Now, the BP-SPX still has room to go lower. You can see here, we're going to be watching to see if it crossed below 30. That would get into that oversold territory. It can be oversold for quite some time. Just note that when it gets there, then you start to look for long positions. The same thing with the BP-NDX, still has room to fall lower and or higher, but it is aiming itself south right here. Another thing that we've been talking about, if you don't follow me on the Discord group, we said pay close attention to the TNX, the 10-year yield. We saw the big spike there. What does that mean? Well, we saw some pressure in the Qs when we started to see this run up, and we started to see strength in the banks, which we'll get into here momentarily as well. Now, the question is this a bull flag? I mean, we still have a lot of work to do to break out of this, but if we do start seeing the market wanting to press this out of this channel and continue to press higher, that could spell out some devastation in the markets and various sectors too as well. Here's the TLH, the bonds. We have this inverse head and shoulder. This was our objective right around 148. This could be just pulling back and then potentially go reach it. However, if it cracks back beneath the low of this day and closes below there, that would be destroying that little neckline. So that would then be, I would just be looking at this as a inverse head and shoulders and a failed attempt on a, I'd be looking at this as a bear flag, and if this would be a failed attempt at an inverse head and shoulder breakout. Another thing that I want to pay close attention to is the VIX. The VIX, it was up 6.6%. You know, nothing crazy here, to be quite honest. We had a little spike towards the end of the day, but really there wasn't much damage done in the S&P 500. So we'll continue to see what develops here. We still have 3 open gaps beneath us, and we have these 2 gaps here beneath us. We have 3 gaps above us. Also to note, we did break out of this symmetrical or this falling wedge right here, and that could be the start of a greater move. You can see the curling right here of the daily VIX here on the RSI. And sometimes when we get this and it gets back above 50, you can see a sudden spike where brings us into that overbought territory. And at that point, if we get that and we get these gap fills like this, that to me would be setting itself up for a bounce in the indices there. So S&P 500 on the daily time frame, this is what I'm calling out here. First off, we had this, if you just really look at this channel that it's been in, this little box, we did break out of it, create an all-time high, but we were doing so on just kind of declining, slowly declining volume. And that to me is in and of itself a red flag. Then we have this crackdown day. It was an FOMC meeting, a lot of nerves in the market trying to digest this information. And then we saw selling pressure with a lot more volume. I mean, significant more than we've been seeing on these all-time highs. So that to me is interesting because we're starting to see the market drift higher on lower volume, but then if it goes down, we're seeing it on stronger volume, which is not the greatest sign, but we're technically still sound as far as context goes. We're still above the 50-day, above the 100, above the 200. They're all sloping up very nicely at this particular point in time. However, when we do zoom into the 15-minute time frame, check this out. We did, now, like I said, if you're part of the Patreon group, you would have seen this message that I posted, but I was alerting basically right when we're on the 5-day moving average. And the reason why is because that's a very important level. And if it started breaking down through that, well, guess what? We'd get more selling pressure most likely. It's been holding as an area of support. So if it breaks, it can become a level of resistance and we might see selling pressure. Now, that was right around the Fed announcement. We saw this big spike down, very, very, very oversold. So we got a very aggressive rally. Look where it came up and acted as resistance. Then we headed lower into close. So let's see what the market brings us tomorrow. We still have a gap beneath us here. We have this area of support. If this gap comes in, you can see the volume profile, this volume shelf profile here on the left too as well. So anything can happen, but the bears do need to hold down here a couple of days to start turning this moving average. And then that would become a little bit more, significantly more cautious, and I would think that we would get that June bottom potentially to see that strength into July. Let's look at the Qs. The Qs, nice hammer candle. Honestly, this makes sense to me. I would imagine it wants to come down a little bit lower and then potentially try to go up higher. As it stands right now, I mean, we made such a big move from down here in mid-May, and then we just rallied pretty much vertically up into an area of resistance. So you don't want to buy if we just get a vertical move up here. You want to let it digest the gains and then see if it can continue to press higher, okay? This day also a big increase in volume here, ended slightly down on the day, but nothing too crazy, nothing too shocking. As far as the 15-minute time frame goes, we still have an inclining day moving average. We did close right below the 5-day inclining moving average, and you can see here, it was just a choppy day. We started up, like we had a little falling wedge here pattern, and we broke out of that, and then it was a false breakout, and we started to head lower. You can see the 5-day acted as support, and then a dead cat bounced, completely crushing, and then we had that rally back. So, the bulls are still here. They're buying those dips. Now, if we start taking out these lows, that's going to be a little bit more of a cause for concern. If you look at the semiconductors, we did close below the 5-day moving average. The 5-day moving average is still inclining at this particular point in time, so it has some work to do. We want to see the price get back above there. Like I said, it's very hard to. You don't want to try to predict the market. You just want to play into its action. And as it stands right now, everything is, the bears are getting hold of this 5-day moving average. So the bulls need to reclaim it. Now, if we start taking out these lows, that's where it's going to be a little bit more of a cause for concern, but we're not quite there yet. Dow Jones daily time frame. This one has been the laggard. You can see here just multiple red days in a row. It's just slowly arching itself over. We did close beneath the 50-day moving average. The 20-day moving average is at 34403, and then the 50-day is at 34180. So it's not too far off to have a crossover, and that could be pretty bearish too as well. The 5-day moving average is crossing through those as well. So this, to me, if we start taking out these lows, that means, we have a high, a lower high, and then we'd be putting in a lower low. And then at that point, it'd be a little bit more concerning for Dow Jones. As far as the 15-minute time frame goes, you can see here, this could be what is taking place really with the other indices. The Dow Jones is just leading the way here. So we have the now declining 5-day moving average, and you can see that as soon as it started declining, it's acting as that level of resistance. So we're going to continue to see what develops there. Another thing that I want to call out is transports. Transports has been extremely overextended. Now we're starting to see a little bit of weakness, but it's still an overall very strong uptrend. The monthly time frame I'm showing you because I want to bring back the EMA 14697. So if I zoom in on the 15-minute time frame and I kind of scope out here, you can see we've been just trending down, right? The declining 5-day moving average, we've been trying to get it back. We got back to it yesterday, but the bears reclaimed it. I wanted to call out this pink box here because we have a little bit of a volume shelf profile here. So if it does pull into this area, notice the price range is at 14.7, 14. It's just below 14. Let me see here. What was that? 14,700. So if it comes into this, we have this volume, we have the 5-day monthly moving average, we have previous support and resistance here. So that, to me, even aligns up more straight that if we get down there, we could be seeing a bounce from that point. If we start breaking down through that, then I would be very concerned for the transports. As far as the RSI goes, I do notice a positive divergence building here. So we'll see if that means anything in the days to come. Let's take a look at Russell. Daily time frame. Really nothing happened today, right? Just an indecision type day, still holding that trend line, still in bullish context. And it recently came from that breakout. Now, we did close below the 5-day moving average. It is declining. So you can see here since June 15th, really, we've just been in this chop range. We've been putting in slightly lower highs and lower lows in a declining 5-day moving average. So that is not the greatest sign. One could potentially say that this is just flagging where you can draw a line from here through here, and a line from here through here, and then we might potentially see a breakout. That it's very, very possible, but we need to see it reclaim this 231 and have a daily close above there, and then start to see this 5-day moving average start to turn back up, and then off to the races again potentially with the small caps, but it's not there yet. Also to note, financials, when the 10-year yield goes up, financials do quite well. You can see here, big old pull in the price action, and then we consolidated through the day. If the yields continue to press higher, we might see this continue to press higher as well. Now, keep in mind, this could be a left shoulder, this could be a head, and we could swoop down all the way down to 126. That could potentially create a inverse head and shoulders. So that's always a possibility. All right, everybody, let's just wrap it up here with my concluding thoughts. Want to just reiterate once again, June, we saw some fear today in the markets, but it's not to the extent to actually set ourselves up for a very strong July. Okay, so it's not following the seasonality script as of right now. It is not far off, and we still have time from now and into the end of June. So once again, you must respect the trend, be bullish, but be very, very cautious here because this move to the downside will put a lot of fright and a lot of scare. Just a small down day today could put a lot of fear in the market where you're talking about heavily leveraged retail traders out there. And if they start to unwind positions and you start to see more fear take place, you just need to be very, very, one, careful for that, and then two, prepared for a potential move into July, because that's one thing that you don't want to miss is a rally like that if we do get that fear. All right, everybody, that's all I got for you on today's episode. Have a wonderful night.